Hey friends, thanks so much for joining us. We have our good friend Rob Kirby from Kirby Analytics on the line. And the last time we spoke with Rob was back in May of 2013. And at that point we talked about full spectrum banker dominance. And boy, have things evolved and changed even since then, Rob. Welcome back.
Nice to be with you, Sean.
Well, it's a pleasure to have you, sir. We've got Rory on the line as well. I should tell you guys, we were watching a movie last night from Netflix. It's called Margin Call with Kevin Spacey. It came out a few years ago, and it really recounts the financial crisis which began in 2007 with the implosion of Bear Stearns. It recounts that entire implosion of the derivatives and the trillions and trillions that turned against the banksters. And I guess I can't recommend the movie because it wasn't as intense as I think that those days really were. But boy, we're still suffering the repercussions of those days today, aren't we, Rob? I mean, we should talk about the fact that in 2013, the Fed bought 150% more treasuries than all foreigners combined. And we should talk about the fact that bankers are dropping dead like flies from high-rise falls and nail guns. It's just, since we've last talked, Rob, the world has really begun to melt down in earnest.
Yeah, well, you mentioned, Sean, we last talked last May. That was about 20 bankers ago.
Maybe.
Or thereabouts.
Yeah, or 80.
So,
There's probably 60 undisclosed banksters that we don't know about.
Well, there's absolutely something to this, and I mean, exactly what the story is. It's a bit of a tough call. Other than the thing that's really stuck out to me, particularly where J.P. Morgan or the deaths of J.P. Morgan bankers are concerned. It seems that the ones that we've heard about from J.P. Morgan, they seem to be involved in the trading platform / operations side of the bank's trading activity.
Right.
And it's the operations or trading platform side of the bank's activities where all the algorithmic trading and program trading occurs. And this by people who have taken the time to verse themselves in the manipulations of the cartel banks, the gold bullion banks. It's widely assumed and spoken about in our community that it's algorithmic trading that's used to suppress and control markets, specifically the precious metals, the equity indexes, and the energy side. These dead bodies would have had a direct vision into the data and into the trades that would have been involved in doing such things. I guess if you're Jeffrey Christian, you might say, but such things don't happen. So I guess he won't be trying to rationalize why the bankers are all dying. But people like us, I think, do ask these intelligent questions.
Well, that's right. And on that note, since you've brought that specific program trading part of the scenario up, I want to touch on this death of Ryan Henry Crane. He was the executive director of program trading at J.P. Morgan, and this is the most mysterious maybe of all the deaths. It's the most recent one. We broke the news. Zero Hedge really flushed it out and ran with it the following day, and the story went viral. He was 37 years old. He's survived by a wife and a young son named Harry. And according to the entries that people were leaving at the funeral home online, leaving their sympathies, it was a sudden and unexpected death. And there has been an absolute lockdown in the media, really worldwide. Nobody knows how this man died. And they're saying the cause of his death is pending a toxicology report. But when you talk about these people who are doing the program trading, you talk about these people at the highest levels within the criminal banks having stories to tell if they were to be prosecuted. You don't have to be Sherlock Holmes to come to the conclusion that these people are being knocked off when they die suddenly and against all statistical probability. You're a statistics guy, Rob Kirby. What are the chances that these men are dropping dead at young ages unexpectedly by nail guns?
Well, listen, Sean, actually, just to set the record straight, I'm not really a statistics guy. I'm an economics person, and the brand of economics that I've been practicing for the last 11 years is forensic economics. But what I can give you is a little bit of firsthand sort of commentary, and that I worked in a brokerage firm where our clients were basically the international bankers. Like, I dealt directly with the treasuries of major banks around the world. And I can tell you that a 30-something-year-old executive director of program trading at J.P. Morgan probably is earning between $3 and $10 million a year, and that's just a guess. And I'm guessing probably 3 million anyway and more. With a young kid, all I'm saying is these guys have everything to live for, and the notion that these kind of people that are that flush, materially and basically have everything to live for. These are not the kind of people that you'd anticipate going out and committing suicide. The other thing that I would draw, because you spoke in referencing this, if institutions were going to be questioned or if there were investigations, the reality is there is a body in doing real investigations. And that body, its name is BaFin. BaFin's an adjunct of the finance ministry in Germany, and they have sharp teeth, and they've been involved in uncovering wrongdoings in the financial universe on occasions in the past, and they swing a pretty big club. And all I can suggest to you is if with the kind of investigations that BaFin has already gone public and said that they're conducting, these are the very people that they would probably have very, very, very high on their list to want to interview and would want to talk to. And whether there's elements within J.P. Morgan at the higher level that don't want these people talking to regulators, I can't say for sure. But you don't have to be a genius to try and connect some of these dots. And isn't it interesting that for, I think it was maybe 5 years, that allegedly the CFTC had was conducting allegations of silver market manipulation, of which J.P. Morgan was alleged to be more or less at the center of. No bankers getting knocked off then. But the minute, and I mean, CFTC is an inept institution. It's a shill institution. It's an institution that shills for the Federal Reserve and shills for the U.S. Treasury. And isn't it interesting that once an entity like BaFin, once they're on the job, suddenly these bankers start dropping like flies. That stands out in my mind and in my head, front and center. And isn't it amazing when there's real investigation how when the heat gets turned up, these guys start disappearing and dying?
Yeah, in addition to that, Interpol is reportedly crawling all over Deutsche Bank, and you'd recall that a banker was found hanged in his London flat, and it turned out to be William Brokesmith, who was a high-level executive at Deutsche Bank. You mentioned BaFin investigating and asking real questions, whereas the CFTC in our own country will not. It's one of the regulators at BaFin who said that precious metals manipulation is really probably as bad as LIBOR, certainly as serious as the LIBOR manipulation. So you're right, the heat is truly being turned up, I think, all over the world. Now, I don't know if Interpol is any more honorable than the FBI. I mean, the FBI, if they were doing an investigation, they could probably help cover a lot of things up. What's your take on Interpol and any authority they might have?
Well, listen, if Interpol is indeed engaged in this investigation, that to me would go hand in hand with the notion that BaFin is doing their investigations, because my view is that if BaFin were to find wrongdoing, or if BaFin were to try and charge anybody, my guess is that they would probably use the services or the offices of Interpol to conduct those kind of charges or to lay those kind of charges. My understanding of what BaFin does would involve or could involve anything up to and including involving the World Court in The Hague. So the notion that you'd have an international body like Interpol involved in this sort of thing wouldn't surprise me. And all that being said, Sean, I don't think anybody from Interpol is actually going to acknowledge that they're involved in any of this in any manner, shape, or form. My guess is that if anything does actually come of the BaFin / Interpol, I think that it'll probably come, or it'll appear to most as a lightning bolt out of a clear blue sky, if, as, and when they happen to or ever do swoop in and lay charges and start rounding people up. I can only hope that happens, by the way, because in my view, we've had some of the most, well, not, you know what, I'm going to even just say, there have been utterly egregious, off the charts fraud committed in our international capital markets. And I'm gonna say that most of this has come from the Anglo-American centric controllers of the financial system. And the sooner we recognize this and try to deal with this, the sooner we're going to have a chance to normalize our ridiculously malfunctioned global financial markets.
It's funny that Eric Holder, the Attorney General of the United States, has said that we cannot prosecute these people because if we did, that the entire system would come crashing down. I find that to be very interesting in light of what you just said. When is the fraud going to end? I mean, we've got the head attorney, the main person that's supposed to be prosecuting these people and going after them, is saying, well, we're not today.
The chief law enforcement officer in the United States who will not prosecute or get to the bottom of Fast and Furious or IRS investigations of Tea Party groups. I mean, it's, boy, we got our back up against the wall if that's the chief law enforcement officer in our own country. We're screwed.
In my view, Eric Holder's made a mockery of his own office.
Yes.
Yeah, he has, and he goes back to the Oklahoma City cover-up. If anybody would like to Google that, they'll find that that's true. He was involved in the Oklahoma City bombing cover-up. So he's earned his stripes with this cabal. Hey, Rob, what is your take on the fact that in 2013, according to Zero Hedge, the Fed bought 150% more treasuries than all foreigners combined? I guess when we say that the buyer of last resort is the Federal Reserve, that's actually what we're seeing now. It's quantifiable, and that, I think, is the absolute ultimate sign of the end game, isn't it?
Well, listen, the bond market, is a complete train wreck of a fraud, and has been for many years. This whole bull crap that we've heard for the last year and a bit about the importance of tapering. We had the 10-year bond back up in yield by 100 basis points on the threat of taper. And taper was finally announced in mid-June or mid-December of 2013, which is just a couple months ago. And since they've actually announced the taper, the 10-year bond has rallied from a high of around 3.05, just over 3%, to where it currently is at around 2.75, and we've been lower. So the whole idea that when the Fed would announce tapering of their QE or their bond purchases would cause a backup in rates is really a false narrative. And the reason it's a false narrative is because the whole QE program, as it was fed to us by the Fed and the Treasury, the whole QE program had nothing to do with buying bonds to keep rates low. The whole object to QE was, and here you got to remember, QE at its height of around $85 billion in purchases a month involved roughly a 50-50 split, buying mortgage-backed paper and the U.S. Treasuries. And the U.S. Treasuries were added into that mix because they couldn't have had QE and just said it was to buy mortgage bonds, because that would have led people to make the inescapable conclusion that the U.S. banks who were holding all of this mortgage paper were all insolvent, and the U.S. banking system was insolvent. And what this QE allowed the Fed to do was to effectively take AAA rated mortgage paper that the banks couldn't sell to anyone. It allowed them to extricate it from the bank's balance sheets, and now it's all siloed at the Federal Reserve. So, it's in one way it's like taking money out of one pocket, or taking nuclear waste out of one pocket and putting it into another pocket where maybe with a lead lining. But needless to say, this whole QE thing was never about Fed buying bonds to keep rates down, because they have other means to keep rates down that they've been using for years. And that's namely the interest rate swap complex that they use to affect low rates in the long end of the bonds. But this specific QE that they're now talking about tapering was designed particularly to allow the Federal Reserve to get these toxic mortgage bonds off of the books of the banks who held them. And this all relates back to where the beginnings of the whole financial crisis started, which was in early 2007. Bear Stearns blew up because they had a couple of hedge funds that they were running inside their institution that were loaded up on subprime mortgage paper. The subprime mortgage paper had been rated AAA, and it failed. It was the first time in the history of bonds that AAA rated paper failed. And that caused the ensuing credit crisis when commercial paper froze up. The commercial paper market froze up in the summer of 2007. And that all precipitated into the interbank lending market freezing up, and banks not being able to borrow money even on an overnight basis in the interbank market. And that's when the Federal Reserve and the U.S. Treasury hit the panic button and instigated many trillions of dollars worth of short-dated swap instruments called FRAs, initially through J.P. Morgan. J.P. Morgan strapped on in the third quarter of 2007, they strapped on $7 or $8 trillion worth of short-dated FRAs that all matured within 3 months. These instruments require credit, and there was no credit being extended to any bank, as evidence that banks couldn't borrow overnight money in the overnight market. And the notion that J.P. Morgan would be able to put on $7 trillion worth of these short-dated interest rate products that require credit with anyone other than the U.S. Treasury is absolutely a non-starter. And when they did these trades, the Treasury did these short-dated FRA trades with J.P. Morgan. The hedge for J.P. Morgan, because they were priced at yields under where Treasury bills were yielding, and how J.P. Morgan locked in profits on those trades with the Treasury was to basically buy every short-dated Treasury bill that was available in the marketplace, trillions upon trillions of them. And this is what caused the cascade in short-term rates from roughly 3% down to like the zero level where they are now. And this precipitated and caused the LIBOR crisis, and the LIBOR crisis was absolutely a byproduct and a direct result of interventions of the U.S. Treasury's Exchange Stabilization Fund conducting short-dated interest rates. FRAs are called a short-dated swap, or that's how they're classified on the books of the banks. And when the Treasury did these trades with J.P. Morgan, this is what precipitated and caused the LIBOR crisis. The LIBOR crisis, we've been told and fed a lie by the mainstream for the last 6 or 7 years that it was all London-centric. This was not London-centric at all. This was and it was evidence when the TED spread blew out and the TED spread is the difference in yield in the 3-month Treasury bill and the 3-month Eurodollar contract. The 3-month Eurodollar contract is a product of LIBOR. Its 3-month Eurodollar contract settles against LIBOR on the third Wednesday of the contract month, and LIBOR, of course, is set in London. But the LIBOR rate, which LIBOR stands for London Interbank Offered Rate, and what that is supposed to reflect is where the banks are willing to lend their most corporate, their most creditworthy corporate customers, as in where they're willing to offer loans, short-dated loans to their top corporate customers. And the T-bill is basically where the government can raise money or borrow money in the 3-month period, the 3-month T-bill. And when the Treasury did these short-dated swap trades to try, basically what they were trying to do was thaw the frozen credit markets by plunging T-bill rates. So when they plunged the T-bill rates down, banks, that didn't mean banks wanted to lend. So the T-bill rates were cascading down because JP Morgan was being given trades they couldn't lose on with the US Treasury on the other side of it. And they were buying the T-bills to lock in the profit, which caused the T-bill rate to plunge. Meanwhile, the Eurodollar futures, which are reflective of banks' willingness to lend, they remained high, and they initially wanted to go higher. That caused the TED spread to balloon out to about 400 basis points from its customary 25 basis points. And that's when commentary first appeared in the market saying that LIBOR was broken because the Eurodollar, like the Eurodollar, 3-month Eurodollar rates, which are reflective of where banks will lend, wasn't falling in tandem with the T-bill rate. And this was a contrivance. This was forced on the market by the U.S. Treasury. And it's so clear, and they've left a footprint because all this is recorded for posterity's sake in the quarterly derivatives fact sheets published by the Office of the Comptroller of the Currency of the United States of America. And you can go into the archives and you can look and see what they did. It's like they left a trail of breadcrumbs or footprints in the snow. And by looking at these numbers, you can see exactly what they did, and that is what they did. So the whole notion, listen, we've just been sold lie upon lie upon lie upon lie,
right?
And it's all fraud.
It is.
So,
and you noted earlier in the interview Jeffrey Christian, who would probably say that none of this is actually fraudulent, and he would say that LIBOR collusion isn't a big deal or maybe never happened.
Jeffrey Christian should put on a polka dot suit and a red nose and go join a circus.
Well, he's irrelevant.
Jeffrey Christian doesn't know what he's talking about.
No, I know, but my point is he's irrelevant because what we see is a trail of breadcrumbs leading back to Deutsche Bank in the LIBOR manipulation, and JP Morgan. You know, in this last bit that you've been talking, you probably mentioned the name JP Morgan a dozen times. I mean, all signs point to JP Morgan as being one of the very heads at the tippy top of this criminal banking pyramid. And I just want to read for people who maybe don't understand the big picture, because what they get in the mainstream media is this idea that Bernie Madoff is the worst arch criminal in the history of banking and high finance, right? That's what the sheeple are fed. Now let me read this. JP Morgan CEO Jamie Dimon sued over knowledge of Madoff fraud. Two senior officials at JP Morgan Chase & Company and predecessor companies repeatedly confronted Bernard Madoff over irregularities in his business, a new lawsuit said, and suggested the bank leaders had direct knowledge of his Ponzi scheme. The lawsuit, filed in federal court in Manhattan on Wednesday on behalf of shareholders against Chief Executive Jamie Dimon and 12 other current and former executives and directors, was based in part by statements made by Madoff himself during a series of interviews. Quote, JP Morgan was uniquely positioned for 20 years to see Madoff's crimes and put a stop to them, the lawsuit said. I think that you've painted a very good picture of the criminality that we're up against, Rob. And this story about Madoff and his crimes being covered up by the bank he was doing business with, That's what we're up against. Epic criminality and no law enforcement.
Absolutely, Sean. And the whole notion that J.P. Morgan could have a derivatives book the size it is, and up until this London whale issue back a year or two ago, J.P. Morgan had gone something like 11 years without reporting a quarterly loss in their derivatives, arising from their derivatives activity. And I'm just going to tell you the odds of having 40 quarters in a row when you have a book that big, 40 quarters in a row without a loss is probably about the same odds as you know calling heads or tails on a coin flip 40 times in a row correct. And I mean, if you know anything about odds in gambling or doing that, it just doesn't happen. It's impossible. You can't no financial institution. And then you see, and the reason why J.P. Morgan didn't have a loss for 40 quarters in a row is because what is occurring is the U.S. monetary policy is being implemented through their trading desk, with the Federal Reserve in the middle acting as the broker. So I mean, when you know the outcome you don't need to be a brilliant bond trader to know that rates are going down when your trading desk is the one that's implementing U.S. monetary policy.
Right.
Because you de facto know, and you can front run everything that's coming. You can front run it. That's why you never have a loss.
Where do we go with all of this, Rob? I mean, where, as far as the criminal banksters that you've just painted this incredible picture.
Well, I'll tell you what
fraud.
We all need to pray for. Here's what we need to pray for. We need to pray for an institution like BaFin with international assistance from an outfit like Interpol, gets real and lays some indictments and starts rounding some of these people up. Because what's been done here is high financial crimes against humanity.
Yes.
And we need some action taken on this. Otherwise, this continues.
So, are they going to? Or do you think that they're going to crash the system, or do you see the?
They've already crashed the system, technically speaking.
But I mean, but there's this slow burn, as Catherine Austin Fitts calls it, that is continuing. I mean, are they just going to continue to bleed the global patient, or of all the resources? I mean, I know that the system is broken, but as far as it's still functioning, there's still dollars in the system, there's still euros in the systems, there's still all of this. Are they going to crash and burn and push us into SDRs or something else?
Well, you know what, Rory, your question is a really good one, and I'm not an advocate. Frankly, I'm not an advocate of the let's say the alternate powers in the universe, which in our universe today I'm going to suggest is the Asian players, the Chinese, the Russians, and increasingly the Germans, who've really had it rubbed in their face regarding their own gold bullion and the keepsake of their bullion by the U.S. Fed. And I'm gonna suggest to you that while we may have been witnessing what Catherine Fitts refers to as a slow burn for some time now, I don't think going forward the slow burn idea is going to sit well with the Russians, the Germans, or the Chinese, because I'm going to say to you, the Russians, the Germans, and the Chinese, as evidenced by BaFin's investigations, are very aware of the criminality of the Anglo-American banking axis and how evil and corrupt they are. Yeah. And you see, the Anglo-American banking axis has done nothing to engender confidence, or to give anybody else in the world the view that they could be capable of doing the right thing or the decent thing going forward. So, there comes a point where I do believe they're gonna throw down their gloves, and they're gonna take their gloves off, and they're gonna say, let's have at it.
Do you think
Because
that's why? I'm sorry. Do you think that that's why China is acquiring as much gold? I mean, they basically took all of the global mine
well, sure it
produced.
is. Yes, Rory. That's also why China is as I think as of December of last year, China had negotiated. I think it was 22 separate bilateral currency swap arrangements with counterparties, totaling around $2.5 trillion worth. I mean, China's not playing the game with the Americans, and increasingly, I think you're going to see the Germans digging their heels in and being a lot more strident. I mean, the Germans have been ripped off.
Yes.
They've been ripped, and I mean the confidence that the German people have in their own financial leadership of their own central bank has taken a severe hit. And German people are asking questions, and there's a lot of upset people in Germany. And just as recently, there's now a lot of upset people in Russia with regards to the West is clearly and documentedly fomenting a very difficult situation on Russian doorstep in Ukraine.
That's right.
The protests against the government in the Ukraine have been instigated, funded, and fomented by the West.
George Soros specifically, yeah.
Yes, exactly. And I mean, this is the sort of thing America would be jumping up and down and screaming to everybody in the world with if anybody was trying to do such a thing, say in a place like, say, Cuba. And there's history there.
Yeah.
So I mean, it's the rest of the world isn't going to put up with this two-faced do as I say, not as I do attitude that's coming out of the West. It doesn't work. You see, I'm from the West. I'm a Canadian. Listen, I'm a Canadian. I grew up being very conservative politically. I'm now a political atheist because I see no difference between what we perceive to be the left, or what we're told are the left, and the right in the West. I was a Reagan flag waver as a Canadian in my teenage and university years, and I'll just tell you something. We used to have the moral high ground in the West because we looked upon ourselves anyways being the good guys. Hate to tell you guys, we're not the good guys anymore.
We also,
and it hurts me to say it.
No, I know it does. You and I have had this conversation before. We've talked with you before. It breaks your heart to see the United States that really used to be a beacon for truth and liberty on the planet. Of course, those of us that know about the Federal Reserve in 1913, we know it's been a slippery slope. But still, we no longer are that. That is the guys they use to take us into wars of imperialism when they say we're spreading democracy, we're spreading liberty, when the opposite is true. It's very Orwellian. So, Rob, we very much value your time. So, in the moments that we have left, can we just round out what you think is going to happen in 2014 and beyond in gold? Are you surprised to see this rally we've had in the metals, and what's your vision for the future here?
Well, I am not surprised that the price of gold has started to creep back up. All that being said, on any given day, I think that the system or the controllers of the system have the ability to knock the price of gold down any day they choose to. The only thing that maybe is a little different now than it was last year when the price was higher is once you knock the price down to basically the marginal cost of producing the next new ounce, or the marginal cost of production, in a world where the bad guys doing the price rigging are starved for physical metal, driving the price down below the marginal cost of production creates a bigger headache for the price riggers, in that it takes it takes supply off the market, because if you knock the price of producing an ounce, if you knock the price of gold that someone can sell it for down below the cost of production, people start to shut in mine supply, and they stop mining. And when people stop mining, that means less number of physical ounces coming to market. And that means that you're going to necessarily have less number of physical ounces you can squander to suppress the price. And isn't it interesting? That's roughly where this latest boot kicking that the gold price has had. Basically, the boot kicking stopped pretty much almost dead on the marginal cost of producing an ounce of both gold and silver, I might add. And so from here, I would like to think that we could probably see much higher prices, just based on the fact that everybody in the world, or most countries in the world, are now buying physical precious metal and silver. And I would say the outlook from here should be positive. And as this proceeds, I think the credibility of the Western price riggers and their fiat money is going to encounter more and more problems as we move forward. I like the outlook for metal going forward.
Well, we do too, and we always like listening to your outlook, Rob. Everybody, you can catch Rob's work firsthand. I think you're going to have to pay for it, though, over at kirbyanalytics.com. Rob, do you want to discuss that a little bit?
Yeah, no, I'm on the web at kirbyanalytics.com. And every now and then I get the pleasure to speak to people like you, Sean, and Rory.
Well, thank you so much. And, you nailed it earlier in the interview. We always like to come up with a title for these things that is gripping and honest and not misleading. And I think you nailed it earlier in the interview when you said these are high financial crimes against humanity. And that will be the title for this interview. And our guest has been Rob Kirby. Rob, thank you so much.
My pleasure.
All right. Take care, buddy.
Yep. Be good.
Right, we'll talk to you again soon.
Yep. Cheers.